Hello everybody, welcome back to Trading with Artisan Will. This is going to be the weekly trade watch list for the week of June 9th. For today's edition, we are going to be looking at catalysts that you should be watching out for this upcoming week, as well as a brief overview of how the market condition is, and then we're going to be taking a closer deep dive into 5 names that look really good for this upcoming week. Let's get started. First thing I want to show you guys is that you can actually look at the calendar and see what's coming up in terms of news on the TradingView app itself. So I used to use the Red Folder News and Forex Factory website, but this is so much more convenient because it has everything on here. You don't have to go to a different platform or use a different browser. So all you have to do is just open up a new tab on TradingView and then just click this calendar right here. And then once you go to calendar, you can click it to either economic or earnings. And it's really nice because let's say we want to look for the week of June 9th. All you do is pivot to the next week, and then you'll look to see what is coming up. So for example, this upcoming week, we are looking at inflation, which is going to be CPI on Wednesday, and then we have PPI on Thursday, and to end off the week, we're going to have Michigan consumer sentiment. So it's looking like it's going to be a pretty slow start to the week, but then we're going to be pretty jam-packed in terms of data for the end of the week, with obviously Michigan sentiment will actually play a big factor, as for the past 2 months, it's actually moved the markets pretty heavily here. And this is going to be the last week before the OPEX, and it's actually going to be triple witching. So expect lots of volatility towards the end of this week and into the upcoming next week as well, because there's likely going to be some shenanigans playing around. All right, let's take a look at the market as a whole before we jump into the watch list. Now, the biggest thing that I want to really take a look at and just kind of analyze is how the market is going right now. So this is SPY on the weekly time frame. We had our first weekly close above this 595 resistance level, which was this March 3rd candle where we had that really big sell-off, right? That's kind of when the downturn started to really happen here, and that was the first leg down, and then we kind of consolidated to our second leg down. So it's a pretty big deal that the market actually managed to close really bullish on Friday. And the biggest thing is that even though the daily is starting to look a little bit more messy here with some of these large red candles that just pull back to the 8 EMA, and then we get another strong candle the next day, you want to zoom out even more and look at the weekly and then maybe even the monthly, because that really drowns out the noise and gives you a clearer picture on what the actual trend slash higher time frame is actually showing you, right? So if we're looking at the monthly here, we're seeing that even though it's only been about 8 days into the month, it's looking really strong, right? We're actually trading above this candle above, so that's that same 595 level. So on the weekly here, I want to see a really good reaction for this upcoming week where we actually continue higher and potentially test this all-time high level at around 610 to 613 here. But obviously, what we don't want to see if you're bullish is a pretty nasty rejection off of this breakout, and then we pull back into this consolidation zone, right? So this was 2 weeks of consolidation inside this week where we had that gap up to show that strength. So we really don't want to see a pullback that's really aggressive into the lower ranges of around 578. The other thing that we want to really take a look at is crypto in terms of the overall healthiness of the crypto market. So this is Bitcoin on the weekly. We tapped the 8 EMA and we're struggling again at this near all-time high breakout level at around 106. The fear a lot of people have is that this could potentially be a small break over all-time highs to a pretty fat rejection, similar to what we saw in 2021. So for that to really be, that thesis to be nullified, is we want to see, obviously, this candle doesn't look like it's going to close that well for this week, but for the upcoming weeks, we want to see a break of this all-time high level and actually hold it this time. If that doesn't happen, I would be very cautious with continuing to be long in the crypto markets. And then if we're pivoting to Ethereum here, we're looking at and seeing that Ethereum is really struggling to break past the 50 EMA weekly. So I really want to see a break above this 2500, upper 2500 level, which is going to be this 50 EMA. To get that confirmation, we can likely get higher. If you look at the daily time frame, it's actually almost picture perfect in terms of where Ethereum is struggling to break past. It's going to be around this 2678 level. If we're able to have a pretty nice daily close above this, I'm pretty confident that we can see at least 3,000 up to 4,000 per ETH. And if we pivot to the tech indice really quickly, the cues show you clearly that tech is leading the charge in terms of strength. So we had 2 weeks of the same consolidation, but it's a downward trend line break. And we closed above this level with a really strong volume candle on the weekly time frame here. And we're actually just shy of $10 away from this all-time high level. When you see this normally, this tells you there's likely going to be continuation, but it's very likely that we could get a potential retest of this 520 level, which was this breakout zone in the first place. But of course, it's the same thing as individual names. We want to see this previous resistance level build out constructively and become new support. So of course, the biggest thing everybody is watching is whether or not we break past all-time high levels and just absolutely skyrocket more to make completely new highs and break records. But on the other hand, obviously we can see a pretty hard rejection or some type of double top where we break highs by a marginal amount and then we pull back pretty aggressively. So that's the biggest thing you want to look out for. And it could be argued that the risk to reward for longs at this point in the market is likely starting to become less and less favorable. So keep that in mind for how much capital you're actually deploying into the market and just managing your risk appropriately. The other really cool thing I want to look at is IWM. So IWM is covering the Russell 2000. So these will be more so your small cap companies / growth companies that are a lot more risky. We're starting to see a breakout. We actually had our first weekly close above the 50 EMA since that whole debacle into the same March candle on the weekly time frame here. And it looks really, really bullish. We actually closed with a quasi hammer on Friday afternoon. So what we want to see is a pretty healthy continuation. We could easily see some type of retest of this breakout level, but we want to see it hold and then continue forward more. I know that we say this every year with small cap summer, but this actually might be the time for small caps to run. With that in mind, let's jump right into the first name. The first on the list is going to be Shopify. If we're looking on the weekly time frame, it's pretty interesting, right? So this looks almost exactly like SPY and QQQ, where we had 2 weekly inside candles, except for Shopify. This is a third inside week, but we're starting to curl when we actually tap the 8 EMA on the weekly time frame. Remember, 8 EMA taps where it rebounds really aggressively back to the upside shows you there's a lot of strength in buyers, which means the upward trend is likely to continue. Now, if we're basing this off of how SPY reacted to the break of this consolidation, it's to the upside, right? So that's exactly what we want to target as well. I want to be seeing a break above this inside week candle at around 112.38. I want to see obviously a daily close and healthy reaction to this level being broken. And then I'm looking to target the 718, 115 call or the 120 call. The first pit stop is going to be this 115 level, as that was a big contention point in previous price action. When you go down to the daily time frame, it gives you a lot more clarity on where that happened. So if we want to be really particular, it was big resistance point here, tried to break it again, and then we tried to break it again here, and then we had a lot of rejections here where that previous support off of these levels became new resistance again. So clearly this 115 level is where Shopify is struggling to break through. So once we break this 112 level, hopefully we're going to be able to have some type of small pit stop at around 115 before we hopefully continue higher. If we look at the daily time frame, this is a really crazy range, right? This is a really, really big range. If we actually measure it, it's about a 14% range, which tells you that Shopify is likely and possible to move really aggressively to either side. So once we break this level, it shows you that it can be very aggressive and fast in terms of the breakout. The second name is going to be TOST, otherwise known as TOST. TOST is where you can actually order food or even use to pay in stores. You'll see this, it's very similar to Stripe where you just tap to pay. It's those payment processing machines. And the structure looks really, really nice. So if we look at the weekly here, it's the same thing with Shopify where we're having a lot of consolidation and it's right up against this resistance level at around 44. So clearly we're building up a lot of momentum and pressure under this. Think of it as like a boiling pot, right? Like every time we hit this resistance level, the boiling point continues to increase and like the top is starting to rupture. You're starting to hear the noise when the pot starts to boil. If we're able to break this level again with high volume, that confirms that this breakout is likely going to have legs. The other thing to note is that on the weekly time frame with Friday's close, we had higher volume than the 2 previous inside weeks. So when you see this curl up against this resistance level, it's likely that we can see a break in the upcoming weeks. If we're able to see this, a daily close, for example, over this 44 level, I'm targeting the July 18th 45 calls. And then we want to see a break of this 45 level, which is where I have my alert set at 45.6. And then for targets, you actually have to zoom out all the way back to when it first was inceptionalized into the stock market in of itself. Honestly, we could probably target the highs of this wick at around 62 here. And I know it's a little far-fetched, but when you see this type of basing, the move can be very, very aggressive. But if we want to tidy it up a little bit and clean it up, the first targets are likely going to be around this 55 level as we go on the weekly. It actually struggled quite a bit around this 55 range. So easily, if it breaks 45, we can kind of do staggered take profits at 45, 50, 55, and eventually if we can get there to that 65 and 60 level that we were targeting originally. The third name is going to be Amazon. So the next two are going to be Mag 7 stocks. So I want to take a look at Meta and show you the kind of move that I want to anticipate. So Meta here, we had this type of morning star pattern on the weekly time frame. Essentially, all that is it's not the cleanest morning star, but I kind of see that pattern where we had this weekly breakout gap up, and then we had kind of like a doji on the next week where we tried to break it. Sellers tried to put a lot of pressure, but buyers were able to defend that level. And then the very next week, we got that aggressive reaction to where buyers took complete control. And then the very next week, we see this giant breakout candle. We actually were able to catch this, thankfully, off the watch list from last week. And this is the move that I'm anticipating. I want to see this happen on Amazon. If we look at the weekly here, it's almost similar in terms of the breakout level, but it's kind of like that breakout candle. We try to break it and continue lower, but then we had a pretty nice reaction off of buyers, and then we had this breakout on the next subsequent week. If we go on the daily time frame, it shows you a little more clear where it's just kind of like a symmetrical triangle, and then we had this breakout. Obviously more likely to the upside because the EMAs are healthy. It's above the 8 and all the other EMAs. The one thing that's kind of risky is that this Thursday candle from the Trump and Elon Musk kind of battle online gave it a little bit of weakness, but it actually continued higher on the very next day. So it shows you that it's shaking off all the fears and intra-week/day volatility. And I want to really see a break past this 215 level, which is the highs of this point at the original weekly time frame candle. I'm going to be looking at the July 18th 220 calls here to target at least 220, and maybe even we can probably get past it to around 230 at this level of this candle here. And again, I don't think we can continue and have a sustainable move in the markets if Mag 7 stocks and large cap tech stocks don't follow suit. So we're seeing a lot of smaller names like Robinhood, Palantir, Carvana. They're making really aggressive moves, but the Mag 7 and large cap tech stocks aren't really going anywhere, right? So if we're able to break all-time highs on SPY and the Qs, I don't see an environment where the large cap stocks don't follow suit. So just like how Meta made this explosive move past this original level, I want to see Amazon make that exact same type of move. The next name is going to be Google, and it's very similar concept, except Google has actually been a little bit stronger than Amazon here. So we see a downward trend break. So this is pretty interesting. I'm going to tell you the timeline. We managed to have a breakout here, and then we had a little bit of news here where people were afraid that Google is going to lose their dominance and their potential revenue stream because Apple is going to pivot away from using their services. But as we see here, this dip was completely bought up by buyers here, and we actually break this downward trend line and we're back up almost near the highs here. So even though the weekly time frame is not the same representation as Meta and Amazon, the daily shows you that we're breaking this downward trend and we're likely and wanting to continue higher. So very same concept. I want to see a break past this 176.5 level. I'm using the July 18th 180 calls to have that exposure to longs if we're able to break that level. And of course, in terms of targets, I want to see us try breaking this original candle in February at around 183. Obviously, if we can actually get this in the money at 180, that'll be the first take profit point. But I want to show you something really interesting. On the daily time frame, we actually have a really crazy gap fill starting from 192 all the way up to 202. And that was from this earnings from February. So Google is a name you want to keep on your list for the rest of the year for 2025. Because if we continue in this uptrend and manage to break past this 180 level, it's more likely than not we're going to test some parts of this gap fill. And so that'll be a really nice long play in the upcoming future. And last but not least, it's going to be QBTS. We've hit this one before. We actually played this on the original breakout, and I think it's almost time for another play. So this is going to be QBTS on the weekly time frame. We're seeing very healthy consolidation. It's just 2 weeks of consolidation inside this original breakout. We're actually not really breaking down past this structure. So that tells you that buyers and sellers actually agree on this new level. And if you go back down to the daily time frame, this is a lot of ranging. So yes, even though that this can continue, you want to see a full confirmation of this breakout before entering this play for your full size. So what does that mean? I want to see a daily close above this 19.5 level, and I want to see it to be like a healthy candle. I don't want to see a gap up and then just have some type of like really aggressive sell-off for the whole day, but it still somehow manages to close above this 19.5 level. That doesn't give you the confidence to be able to swing this for a long time or even add on full size. So you want to see a full-bodied healthy candle, and it has to be above this 19.5 level. If we're able to do that, I'm looking at the July 18th 20 call. It's the best contract out there, and I really just want to see this confirmation before entering this. You've got to be careful, especially when you see this type of consolidation. It tells you that if it doesn't, it can very easily just chop here and the value of your contract gets completely destroyed. That's it for this week's edition. Thanks for prepping for the upcoming week of June 9th. Good luck in the markets, and I will catch you guys next week.